Welcome to Season 3, Episode 3 of the Ag Policy Podcast. I'm Josh Bakey. I cover U.S. food and agriculture policy for Farm Progress. Joining me today is Bruce Blythe, the senior editor from Farm Futures. Bruce covers commodity markets and the farm economy. He grew up on a grain and livestock farm in Iowa. These days, he calls Chicago home. Hey, Bruce, how you doing today?
I'm doing well. Happy holidays, everyone. Thank you for having me.
Appreciate you being here. And before we get started, I needed to ask you about one of the most important issues here in the U.S. How the heck are your Chicago Bears doing so well while my pathetic Dallas Cowboys are once again going nowhere?
I don't know. I think it's our turn. It's been pretty brutal last few years. I think we're due. I think that has something to do with it. Papa Bear House is sending us an early Christmas gift. So, yes.
Hey, that must be... well, that's the last we're going to talk about that. We're going to move on to something even more depressing to me, and that's the state of the ag economy. In the last two episodes, we've spent a lot of time talking about trade and the impact of tariffs on the ag economy. I'd like to start off with talking about the U.S. ag economy, specifically row crops. Can you just give me a brief overview of the state of the U.S. Ag trade economy and kind of how it compares to last year?
The state of the row crop economy is it's struggling again for roughly the third year in a row. Struggling from historically low crop prices for corn, soybeans, and wheat. And at the other end, high input costs for fertilizer, seed, and other things like that. So row crop farmers are getting squeezed on both the cost and the revenue, the crop price side. So 2025 is shaping up to be another rough year. 2026 does not look much better. The USDA does forecast an increase in crop receipts, a decrease in crop receipts, and an overall increase in net farm income. But a big chunk of that is due to emergency aid. In fact, that was just announced earlier this month about a $12 billion, in a bridge payment. The USDA is saying we're going to see aid quadruple basically to something in the neighborhood of 40 billion this year. So that's not a good sign. The outlook for 2026, more of the same. You've got heavy supplies, record corn crop likely from the U.S., probably another record soybean crop from Brazil. Global wheat production is supposed to hit a record for the 6th year in a row. So we just are awash in grain. Demand generally is good, but it's not good enough, and that's a problem because we don't have the price. The farmers aren't getting the prices they need to be profitable, and
Sure.
It doesn't appear like that's going to change anytime soon. Maybe not. Probably not in 2026, maybe in 2027. There's hope that maybe we are bottoming out here and we're eventually going to start to return to a more profitable industry here later in the decade.
Now, correct me if I'm wrong, but if I remember a report on farm income from earlier this year, wasn't a significant percentage of that also propped up by government support, as I recall? And I apologize if I'm catching off guard on that one, but I seem to remember kind of a similar story on the last overall farm income report. So it sounds like kind of a similar thing for next year, if I'm hearing you right.
Yes, that's accurate. The USDA does net farm income forecasts every year and updates them at different points in the year. Then they've got direct government farm payments forecast at over 40 billion in 2025. That's a 30 billion increase from 2024. So you're quadrupling the level of direct government payments. That's helping. Look, the income numbers look a little better than they actually are. But yeah, a lot of aid flowing to the farm sector again. And again, that's a reflection of just the poor economics the sector is suffering from, and has been for the past 3 years, and probably a fourth
Yeah.
next year.
Yeah. So obviously, one of the biggest stories in ag this year that I think you and I are both pretty familiar with, has been the plummeting soybean exports from the U.S. to China. I think China didn't purchase any soybeans from the U.S. until I want to say end of October, and that was after a deal between China and the U.S. to kind of call a truce, if you will, in the trade war this time, or for now. In return, China agreed to purchase a specified amount of soybeans from the U.S. From your analysis, does China seem to be living up to that agreement so far?
China has been following through. Let's put it that way. Since Trump and Xi struck this trade truce in late October, China has stepped back into the U.S. soybean market. It had basically cut off the U.S. at some point last spring. I want to say May or June. As trade tensions continue to escalate. So China had basically cut off the U.S. and been sourcing almost all its soybean imports from Brazil. In fact, over the past 6 months or so, Brazil probably accounted for in the neighborhood 85 to 90% of Brazil's soybean imports, and the U.S. Most of the rest, and Argentina as well. So the good news came at the end of October with the trade truce, and about 3 weeks later, we saw our first Chinese purchases of U.S. soybeans. So yes, that came as much welcome news to the farm economy. China has been regularly making purchases over the past 3 weeks or so. We've gotten nearly daily announcements from the USDA confirming these purchases. They're called flash sales. If an export sale is above a certain level, it has to be reported to the U.S. government. So we've been getting these reports. However, it's turned into kind of a buy rumor, sell the news situation for the soybean market. The very first day the USDA confirmed the Chinese purchase was November 18th, which also happened to be the peak of the soybean futures market rally, around $11.70 a bushel. It's a 17-month high, highest since mid-level, and ever since then it's been almost straight down. In fact, the market's trading around $10.63 right now, which is down over $1 from that peak. So I think the market, saw this coming, as futures markets do, and now that it's here, they're seeing the purchases that China's making. They have purchased at least about 3.5 million metric tons so far, based on USDA confirmations, and the initial pledge was to buy 12 million metric tons by the end of the year, which is around 440 million bushels. Now, there was some confusion over that time frame that they were going to do this by the end of calendar 2025. And then the Trump administration kind of walked that back and clarified, well, this is a discrepancy. The target was actually going to be hit during the crop season. Not our crop season necessarily, because nothing's growing right now, but they're saying by the end of February, I believe this was the latest update, that we'll hit this 12 million metric ton target and all will be well. And then in the 3 following years, China's going to buy at least 25 million metric tons of U.S. soybeans a year. So those are some ambitious targets, and it has restored some hope. As it stands, China is less than halfway to its initial target. It's still possible it could get there by the end of February. Right now, they're probably about 20, a little under 30% on their way to the target, and it's quite possible they could keep making purchases every day or so, and gradually ramp up their purchases toward what they supposedly agreed to.
No, I thought it was interesting in there because obviously you're the numbers guy way better than I am. But if I heard you right, you mentioned that like this is not boosted soybeans prices up significantly. And I think there was some hope, and especially if you listen to the Trump administration try to spin this. Once we get these sales going, farmers are going to see this great improvement in the farm economy. But kind of from what you're saying, this is already like where we are right now is kind of already considered in the calculations of the people setting soybean prices. I'm trying to say the market had already considered this possibility. So really, we haven't seen a big boost in prices and an improvement. It's better than it was, but not this windfall that I think some people in the administration were hoping it would be. Am I right on that?
Correct. Well, by itself, China buying more U.S. soybeans would be viewed as a bullish dynamic for the market. However, this comes against a broader context of South American corn and soybean production. Brazil expanded soybean acreage again which they've been doing for almost every year for the past 3 decades. They're in line to produce another record crop. There has been a little concern over dryness in some crop areas of Brazil earlier in the fall. There's been some recent rains that have fallen over much of the growing areas. I think that's something that's been weighing on soybean prices. So, yes, you have this Chinese demand coming back in, but it's also against the backdrop of just another massive crop out of South America. And South America passed the U.S. as the world's top soybean producer sometime in the late last decade. This year, they're on their way, barring a severe drought that suddenly sets in, they're going to harvest well in excess of 6 billion bushels and most likely retain their status as the world's top soybean exporter and China's top supplier. So that's obviously bearish. Exports in general for U.S. soybeans, not a very encouraging picture. USDA has soybean exports this marketing year dropping to 1.653 billion bushels. That would be a 13-year low. Be down 13% from last year and a 13-year low. So a big problem is China was absent for so long. We are just way behind on our typical export pace. You've got soybean shipments through the first 3 months of the year or so running like 40% below the same levels a year ago. So we've got a big hole to dig out of here in terms of our export business. I mean, it's still possible that we can close that gap a little bit, but the export picture is not price friendly long term at the moment. The the global supply situation also not very bullish. Domestically, we have record soybean crush demand. That's good. I think that's helping keeping kind of a floor under the market. But overall, it's a pretty tough picture here, I think, for soybeans. And I'm at next year when U.S. farmers start, hitting the fields again. They're expected to plant more soybeans versus corn, and that would, in theory, lead to a larger U.S. crop. So the supply side is definitely leaning bearish, and it doesn't look like there's going to be much of a change in that outlook for the near term, unfortunately, unless China really sharply ramps up its purchases here in the next few months.
And obviously we spent a little time here talking about the perspective, specifically soybeans and U.S. farmers, but I think the economic challenges for farmers are not just limited to the U.S. Like you mentioned, China is getting way higher percentage of soybeans from Brazil. But you recently wrote a piece, and I believe the headline was "Brazilian farmers are silently grow." Let me say that. So let me say it again: Brazilian farmers silently going broke. Tell me a little bit about that, because I think the assumption would be, the U.S.'s loss is Brazil's gain, but from reading your story, that's not the case. So tell me a little bit of that, if you will.
Yes, that was actually yeah, that was a Ag Marketing IQ video featuring Matthew Cruz, is one of our Farm Futures contributors, and he was talking about, you know, the problems that U.S. farmers are experiencing with high input costs and low crop prices. Growers elsewhere are suffering the same thing. It's not just a U.S. It's not just a U.S. problem. Brazil farmers are getting squeezed. There's signs of financial strain, rising bankruptcies in Brazil among farmers. So yeah, they're having problems of their own, and I think it's just sort of a lesson in fundamental supply and demand, and when supplies keep growing and growing and growing and demand doesn't keep pace, then ultimately there has to be a correction. Like, for example, farm bankruptcies in Brazil tripled over the past 2 years, according to Matthew Cruz. So yeah, this is there's pain all over the world from these this weak ag economy, and I'm not sure what is going to reverse it at this point. Brazil doesn't show much inclination to slow its acreage expansion. The U.S. might see a drop in corn plantings next spring, but also an increase in soybeans. Farmers here, have to plant something to generate revenue. So I don't know. It's a pretty tough picture worldwide, and
it's not just
barring like a supply shock, like a severe drought, or a major war. It's probably going to continue here for the foreseeable future.
Yeah, and like you said, obviously we talked about supply here, but it's not just supply, right? I mean, like in these factors here in the U.S., higher cost for equipment, higher costs for seeds, labor shortages. In the U.S. we have labor cost issues, kind of all coming together at one time. But I think that's a phenomenon. Many of those factors are also at play in Asia, in South America, like you said, in Europe. I mean, this is a global. We're seeing this across the world right now, correct?
Yes, the major farm economies, I think, are all suffering under some form of a squeeze or another. Can't speak for Europe or Russia necessarily, but the biggest producers, corn and soybeans, which is South America and the U.S. We're also seeing bumper crops. Canada's bumper wheat crop. We're just, farmers are very good at what they do, and that's growing crops. It's just we happen to be in sort of a cycle where the supplies just keep growing and growing, but the demand isn't keeping pace, and the prices are reflecting that.
Sure. Now, one of the things we hear a lot in the U.S. from our administration, is the President Trump has promised that these tariffs are going to bring some short term pain, but long term they're going to generate better trade deals that will benefit the U.S., will benefit other countries. I've heard multiple times we're about to enter the golden age of agriculture. Is there any evidence that golden age is anywhere close right now?
I personally have not witnessed it yet. it's not to say it isn't out there taking shape or might happen. I'm not sure how you would define that term. I think the U.S. farmers would be happy with just profitable crop prices for their crops. Corn above $5 a bushel, soybeans above 13 a bushel, something like that. They just want a profitable price for what they're producing. They don't. I think you ask a farmer how would they best prefer to, or how would they most prefer to make money? And it wouldn't be through government aid. They want to make money through profitable prices and open markets.
Sure.
So part of the Trump policy is and has been aimed at striking trade deals with countries all over the world, and you've seen a lot of examples of that over the last several months. Indonesia, Vietnam, some of these smaller to mid-sized Asian emerging countries, have agreed to step up their purchases of U.S. ag products. I think some other, like the Western countries, have as well. However, compared to China, a lot of it's just a drop in the bucket. China's the world's biggest soybean importer. They shipped in 108 million metric tons or so last year. Probably going to ship a little bit or import a little bit less this year. But again, Brazil has the lion's share of that market now. I don't think they're going to give it back. Trump's trade truce with China, the terms that according to the White House anyway, and we're not sure if China's actually confirmed this. We have not seen like a piece of paper in front of that saying we agreed to this, but they are. I think the terms are 12 million metric tons near term by the end of the year, by February. 25 million metric tons a year at least for each of the next 3 years. And okay, so that's not a pittance, but I'll point out that those numbers, if they do hit them, are still less than what China was buying from the U.S. over the past 5 or 10 years. In fact, they'd be down 10 to 12% from what China has bought from the U.S. over the past 5 years or so, and down a similar amount from 2021 to 2024, where we averaged, I think, around 29 million metric tons, or a little over a billion bushels. So, in other words, American soybean farmers sold more to China under Joe Biden than Donald Trump.
I think that's a stat a lot of people would be surprised to hear.
Yeah.
Just wanted to point. I just wanted to make sure that I have right. And there is, like you said, some optimism with some of these trade deals. You mentioned Indonesia. There's talk with India. I don't think there's been a tentative agreement yet, but some progress there. Obviously with China, EU, the UK, but still, as far as I know, all of these deals, there's like a tentative framework in place. But these deals still need to be finalized and ironed out. And as far as I've seen, or what I've seen so far, that isn't the case. These are still all under negotiation right now. Is that what you're seeing as well?
Yes, the playbook seems to meet with leaders of these countries and strike framework kind of agreements that involve pledges or promises to invest X billion in the U.S. or buy X billion out of U.S. ag commodities. So, yeah, it seems a little nebulous, and I think that the market kind of reflects that skepticism. Just what will all these numbers actually materialize? I mean, I'm not saying they won't.
But still a lot of work to be done, though. That hasn't been
much. Yeah, much. And these things take time, and they move slowly. U.S. again, it comes down to supply and demand, as well as things like price relationships. Like, can you get a better deal buying soybeans from Brazil than the U.S.? Right now, U.S. soybeans, I think, are cheaper than Brazil based on export values. But China is pretty well supplied with soybeans at the moment, and then you've got Brazil's crop in the pipeline here in a month or so. So yeah, I mean, I think if you look at the trade agreements as a whole and take an optimistic view, there are reasons for hope. You can look at the domestic crushing demand for soybeans and see some reasons for optimism there. But the market right now is telling you that it's skeptical, and it also is telling you it sees another big crop coming from South America, and plenty of competition on the global markets for U.S. grains.
Sure. Well, we had a lot of doom and gloom talk here, kind of as we expected. There's some potential trade deals to maybe benefit the U.S. farmers, maybe benefit other farmers across the world potentially. Any other, and as you said, I think earlier, the outlook for 26 isn't great. Going forward, are there any other bright spots for farmers, or where would you find hope if you're going into this business? Because right now, have a conversation like this, it just sounds awful. So I'm curious where the hope is, where's the potential? What are we not looking at right now?
Well, you can find there are reasons for hope. Again, I think demand is a positive. There is demand for what American farmers produce, not just grains, but also livestock. Beef demand very strong. Corn exports running at a record pace this year for the U.S. Countries like Mexico buying our corn hand over fist. Ethanol and biofuels market, the demand from that is very strong, and the Trump administration has expressed support, for the biofuels industry. So, if we can get some friendlier policy that raises, the biofuels targets blended into gasoline and diesel, that's supportive. I think, the crops are, we have the technology to put these crops in and produce big harvests, where we can avoid, damage from droughts much more than we used to. So, yes, the costs are very high for machinery inputs and so forth. There's hope. Interest rates are coming down. I think that could help. And again, agriculture is very cyclical. We are going through a deep down cycle right now that's probably going to last at least another year, but as history shows, these down cycles eventually end and things start turning back up. And you never know where the next black swan, supply shock, something's going to happen to the world that shakes the markets up, that could send crude oil $20 a barrel higher or something. Grains could latch on to the ride for something like that. And again, this is expression said ad nauseum in grain markets, but the best cure for low prices is low prices. So
we certainly
it will. This too shall pass. We just don't know exactly when, and right now we're just looking at a 2026 that may look a lot like 2025 in terms of profit prospects and commodity prices. So So
extra cure for low prices. It sounds like we'll have plenty of that to go around, at least to start the year. But like you said, hopefully some optimism there. So, well, I think that is about all the time we have for today. Thanks again, Bruce Blythe, for being on with me today. You can find his work at farmfutures.com. He offers a lot of expert analysis on just about a daily basis, right, Bruce? I think you're right. Every day. I see you up there all the time. So, yeah, every day he has a
Farm Future. Yep.
A Farm Future.
Sign up for our free newsletter.
There you go. Sign up for the newsletter. I get it. It's good. Also want to thank our producer, Hans-Jörg Jaeger. He's hard at work putting this whole thing together. Really appreciate all his help here. If you liked what you heard here, we'd love it if you like, follow, subscribe to us on our various sites. We're currently on Spotify, YouTube, and LinkedIn. Hopefully more soon. You can also find my ag policy coverage at farmprogress.com. Until next time, this has been the Ag Policy Podcast. I'm Josh Bakie. Thanks so much for tuning in.